Okay, today we're diving into two giants of the internet that honestly couldn't be more different. On one hand, you have this silent, invisible landlord who just collects rent on the internet's most valuable real estate, and on the other, you have the flashy, in-your-face realtor that we all know. This is the tale of two internets, Verisign versus GoDaddy. You know, it's something we do dozens of times a day without even thinking about it. But every single time you type a .com address and hit enter, this hidden economic chain just kicks into gear. And right at the center of it are these two companies with completely opposite ways of doing business. So let's pull back the curtain and figure out exactly how they both get their cut. All right, to really get this, let's use a simple analogy. Just imagine the entire internet domain space is this massive, sprawling city. In this city, one company is the landlord. They own all the foundational land itself. And the other company? They're the realtor on every street corner, selling plots to anyone and everyone who wants to build something. And here they are. You've got Verisign, the quiet, almost invisible utility company, and then you have GoDaddy, the super familiar face of the internet. Their brands are worlds apart, and as you're about to see, so are their entire business models. Let's break down what each one actually does. So Verisign is the registry. They are our foundational landlord. What that means is they manage the master database, the ultimate source of truth for every single .com and .net domain on the planet. But, and this is the crucial part, you can't just go and buy a domain from Verisign. Nope, they only deal at the wholesale level, selling access to the realtors. And who are those realtors? Well, that's GoDaddy. They are the registrar, the public-facing shop. They're the biggest in the world, selling domains directly to over 20 million customers. But for GoDaddy, selling you that little plot of internet land is just the beginning. It's the hook. It's how they get you in the door to then sell you the web hosting, the email, the security, everything else you need to actually build on that land. And these totally different roles create two completely different kinds of businesses. Verisign is a fortress. It's protected by a government-sanctioned monopoly, and that lets them have this incredibly simple, insanely profitable business with a staggering 68% operating margin. GoDaddy, on the other hand, is this bustling, chaotic marketplace. It has to rely on its brand and its massive scale, but it's a much more complex, lower-margin business where they have to juggle millions of individual customers.
Thank you for watching. Please like and subscribe to our channel.
So, you've got the fortress and the marketplace. You'd think you have them pegged, right? But now, there's a new force that's shaking everything up. Artificial intelligence. And both companies have to adapt. But true to form, they're taking completely opposite approaches. One is playing defense, the other is all-out offense. Verisign's AI strategy is pure defense. It's looking at AI and seeing a whole new world of complex security threats. So what are they doing? They're reinforcing the fortress walls, developing things like quantum-resistant cryptography to make sure the internet's core address book stays safe. GoDaddy? They're going on offense. They're trying to build the entire infrastructure for what they call the Agentic Web, a future where AI bots can securely find and transact with each other. And GoDaddy's ambition here is, well, it's massive. With their new Agent Name Service, or ANS, they want to turn a simple domain name into a verified digital passport for AI bots. The end goal is to make the good old DNS the main identity system for all future bot-to-bot commerce. It's a really bold play to own a central piece of the new AI economy. Now, these huge strategies, both the defensive and the offensive ones, they're only possible because each company has a really unique competitive advantage, what investors call a moat. So how do they protect their profits? Well, the answer really comes down to where they get their pricing power. You see, Verisign's moat isn't a better product or a slicker brand. It's a contract. It's a government-sanctioned monopoly handed down by ICANN and the U.S. government that says they, and only they, can run the .com registry. For any competitor, it's basically an insurmountable legal wall. And that contract gives Verisign this incredible legally guaranteed pricing power. Starting in 2026, they're allowed to raise the wholesale price of a .com domain by 7% every single year. And because their costs are mostly fixed, that extra money is pretty much pure profit. GoDaddy's strategy is the total opposite. They lure you in with a super cheap, like $5 introductory offer, and then they just bank on you not noticing when the price jumps to over $20 to renew it. It's a classic retail trick, but it means they are constantly vulnerable and fighting off competitors. So we have this stable monopoly and the competitive retailer. You probably think you know how this story ends, financially speaking, but this is where it gets, well, a little weird. When you look at the numbers, you find this paradox that's created a huge disconnect in how Wall Street values these two companies. So let's start with GoDaddy, the marketplace. For 2025, it's projected to generate a massive $1.61 billion in free cash flow. Just think of that as the pure, cold, hard cash left in the bank after every single bill is paid. It is a huge amount of money. Okay, now let's look at Verisign, the fortress. In that exact same period, it's expected to generate about $1.07 billion in free cash flow. Now, that's still a really healthy number, but it's more than $500 million less than what GoDaddy is bringing in. And right here, this is the heart of the whole paradox. GoDaddy is generating roughly 50% more actual cash than Verisign. So why is its total market value nearly half of Verisign's? It seems like it makes no sense at all. But the answer isn't about the amount of cash, it's about the quality and the predictability of that cash. Let's look at how this breaks down. Based on projections, Verisign's total value is over $26 billion, while GoDaddy's is just over $13 billion. Now, the key number to look at here is the price-to-free cash flow ratio. Basically, this tells you how much investors are willing to pay for each dollar of cash a company makes. And they'll pay almost $24 for one of Verisign's dollars, but only about $11.50 for one of GoDaddy's. The market is screaming that Verisign's profit is just way safer and more reliable. If you look at it another way, this is the free cash flow yield, your cash return on investment. Because GoDaddy's stock price is so much lower compared to its cash generation, you get a theoretical yield of almost 9%. With Verisign, it's only about 4%. The message from investors is crystal clear. They demand a much higher potential reward to take on what they see as the higher risks of GoDaddy's business. And this big valuation gap, it forces every investor to make a choice. And to really understand that choice, there is no better case study than to see where one of the world's most famous investors, Warren Buffett, has placed his money. The fact is incredibly simple and incredibly telling. Warren Buffett's Berkshire Hathaway owns almost 10% of Verisign. At the same time, it is never, ever disclosed owning a single share of GoDaddy. I mean, that one data point tells you almost everything you need to know about how conservative, long-term investors see the fortress versus the marketplace. Let's be honest, Verisign is a textbook Buffett investment. It's a simple, essential business. Its moat, that government contract, is wide, deep, and super easy to understand. It has predictable revenue and pricing power that's literally written into the law. It's not a flashy, high-growth stock. It is a financial fortress.
But of course, no investment is ever totally risk-free. Verisign's biggest threat is political. Regulators are really starting to ask tough questions about its monopoly pricing. For GoDaddy, the dangers are all market-based. They face brutal competition, massive uncertainty about whether their big AI bet will ever pay off, and they've got some ongoing legal issues hanging over their heads.
And so, at the end of the day, we're left with the ultimate question. As AI completely reshapes the web, which model is going to win out? Is it the unbreakable vault that quietly and reliably secures the internet's foundation? Or is it the bustling marketplace that's betting everything on building the new town square for our AI agents? The answer is going to shape the very infrastructure of our digital future.